You and I don't have to try to build a portfolio that can beat the performance of the S&P 500. We can simply invest into a fund that tracks the index and gives us exposure to those 500 largest companies in the US. Today, I'm going to be giving you an update on my investing into FXAIX and VOO, the Fidelity 500 index funds, and the Vanguard S&P 500 ETF, exchange traded funds. So investing does come with risk, but investing into these 500 companies mitigates that risk. And the average performance of this fund is about 10 to 11% per year. But take a look right here at the last 40 years of performance, and you'll see that there are many years that are higher than that. And of course, there are some years that are negative, like in the early 2000s when we were dealing with the dot-com bubble, in 2008 when we were in a period of recession and a financial crisis, and more recently in 2022 with high inflation and interest rate costs and overall economic uncertainty. But what always happens is the market recovers, and we're not just investing into one individual stock here, we're investing into hundreds. So for the week ending October 11th, 2024, the S&P has hit a record high. For the first time ever, it hit over $5,800. So investing to the index gives you exposure to all of these top companies with less stress when a particular company or sector is struggling. For example, with tech company Tesla pulling back after their robotaxi event. While on the other hand, the banking industry is doing well with strong earnings and increased investor confidence. Just a couple examples of why I love investing into this group of companies. But let's get started. Now, let me share a little bit about my story of why I invest into both of these funds and some detail about each of them. Last year in September of 2023, I decided to close an account that I had over in Empowerment. I was not happy with the performance or expenses that I was being charged over there. I had an expense ratio of 0.93, which we'll get more into. The performance was not meeting my expectations. I was not able to work with them to find something better. So I just decided to close the account, move it over to Fidelity, and get started with investing into this fund that I discovered over there, which is FXAIX, the S&P 500 Fidelity Index. So I'll be sharing my results a little later on. Now, VOO, I have investment accounts for different reasons. The one at Fidelity is in an IRA for retirement after 59 and a half, while VOO, I'm doing that in my account over on Webull, which can be for early retirement or whenever I need to tap into it. So I chose to get exposure to the S&P 500 through that Vanguard ETF over there. Let's go through some key points concerning both of these funds. Year to date, it's up 21.22%. Over the last year, it's up 32.63%. And over the last 5 years, it's up 96.61%. VOO was launched by Vanguard back in 2011 and has become a go-to ETF for exposure to the S&P 500. It has over $1 trillion in assets under management, making it one of the biggest and most liquid ETFs out there. While FXAIX has been around since 1988. It is managed by Fidelity and also tracks the S&P 500. It holds over $300 billion in assets, and it's a great option for those that want that same exposure at Fidelity. So they both track the same index, but VOO is an ETF, an exchange traded fund, while FXAIX is a mutual fund. ETFs like VOO trade on the stock exchange, allowing you to buy and sell shares anytime throughout the market day. So it moves like a stock. While FXAIX, being a mutual fund, is priced at the end of each trading day. Now on to expense ratio, and that is the fee that covers the operating costs of these type of funds. It's a percentage that's taken out annually to manage an ETF or mutual fund. The expense ratio for VOO is 0.03%, while FXAIX is even lower at 0.015. Both super low options for the exposure to the S&P. Now let's run through the top 10 holdings. We have Apple, Microsoft, Nvidia, Amazon, Meta, aka Facebook and Instagram, Alphabet, aka Google, Berkshire Hathaway, Broadcom, and Tesla. We have 2 Google classes there in the top 10. Together, these holdings represent a large portion of the fund, meaning that the performance of the major companies can significantly impact the return of both of these funds. The top 6 companies basically running the S&P are Apple, Nvidia, Microsoft, Google, Amazon, and Meta. Both VOO and FXAIX are weighted by market cap, meaning the largest companies make up the biggest share of the fund. So you're capturing the largest, most influential companies in the US. The funds are rebalanced quarterly, following the S&P 500 adjustment to reflect market movements and changes in the index. For example, about a month ago, Palantir and Dell were added to the index while American Airlines and Etsy were removed. Both funds pay a quarterly dividend, which is a nice way to earn passive income, as well as help you to grow your investments significantly by reinvesting those dividends into buying more shares. So the broad exposure, low fees, as well as those dividends are all reasons why investing into VOO or FXAIX are great ways to build your wealth. And by staying consistent with your investing, you're able to capitalize on compound growth. If you have never done this, take some time and put some numbers into an investment calculator. As I said, the average rate of return of the S&P is 10 to 11% per year. Put in a starting amount, a rate of return, and how much you're able to commit to investing on a monthly basis, and take a look at what you can achieve. If you haven't already, make sure to like, subscribe, and hit that notification bell. And leave me a comment. Let me know your thoughts about investing into these 2 funds or other ETFs that you have in your portfolio. Okay, so now on to my results. Let's start with FXAIX. I ended the quarter at about 725 shares, but right now I'm holding 727.65 shares with an average cost of $161.47. As of today, the share price is 202.02, and I am currently up 25.11%. My last dividend payment was $465.66, which automatically reinvested and added 2.331 shares to my portfolio. Over time, that compounding effect is making a huge difference. And now for VOO, I started investing in late 2022. My first initial investment was when it was $325.13. And now it's up to $532. So I currently have 17.47105 shares with an average cost of $423.80, meaning I am up 25.64%. And let's not forget about those dividends. My last dividend was 1.6386 per share, and that gave me an additional $28.29, which got reinvested because every dollar is going back into buying more shares, because right now I am just focused on that long-term growth. So the magic is really coming from that compound interest, which is helping me to grow my investments more than you can imagine. Remember, it's about being in the market, not timing the market. I don't know how many times the S&P has hit all-time highs in the last few years since I've been investing. But when that happens, it doesn't slow me down. I'm going to continue investing, because what's going to happen in the future is it's going to hit an all-time high again. But I'm going to be in the market, building and growing my portfolio and reaping those rewards. So every dollar that I reinvest, Every dollar that I invest is a step that I'm making to build my wealth. If you've been here before, you've heard me say this before, but stay consistent, be patient, and continue investing regularly. In time, I'm sure you will see growth and progress if you stick with it, just like I have with these two funds, VOO and FXAIX. Whether you're investing into ETFs or individual stocks, the goal is still the same: building wealth and staying disciplined and consistent with your investing plan. Even if you need to start small, just get started. I will proudly invest $5 or $10 into my chosen ETFs or blue chip stocks in my portfolio. Please make sure to check out my investment links for Webull and Moomoo. They will be in the description and pinned in the comments. And also consider joining channel membership. I'm Lisa J. Stocks. Thanks for watching. Let's continue on this wealth building journey together. Okay, bye.